Looking for reassurance as you watch the value of world equity markets melt away like cotton candy in a rainstorm? If you need to be reassured by our Dow losing 18% of its value in the last week, Japan's Nikkei losing 25% of its value in the last month, the entire nation of Iceland, of all places, may be going bankrupt. If you need to be reassured, I suggest you put your fingers in your ears when John McCain's campaign manager, Rick Davis, talks about this situation.
There's very little a candidate for president, and frankly, after watching today, very little even the president can say about what's happening in the stock markets other than to hope that, they correct themselves. And
okay, here's the thing about hope. Hope is nice. Hope can be a very positive political thing when a politician inspires hope in people. Hope, however, is not a reassuring strategy for stemming a worldwide financial crisis. Better to offer the people hope, in other words, than to ask people to muster hope in the face of crisis. Asked today by NBC's own Norah O'Donnell why neither McCain nor Palin have been mentioning the stock market on the campaign trail, their campaign manager, Mr. Davis, said this.
Now, I don't know if you really want to turn a campaign into a CNBC news show on the stock market. I mean, it doesn't mean that we don't care and aren't trying to do something about it. It's just I'm not exactly sure what you'd say every day.
Not exactly sure what you say every day? Nothing to do but hope things get better? If that's what my campaign manager had to say about the economy, I guess I'd be running ads about Bill Ayers, too. Today, after a swing of 1,000 points, the Dow closed down 128, which was, I guess, good news, relatively speaking. The market being down 128 is starting to feel like a good day. Down 100 is the new up 300. Nationalizing the banks is the new in the black. In the midst of today's wild day on Wall Street, the White House was forced to say that there is no plan to close U.S. financial markets amid rumors to the contrary. Wow. President Bush spoke publicly again today to try to reassure anxious Americans. The word feckless comes to mind. His financial team is set to meet with G7 finance ministers Saturday, tomorrow in Washington, to discuss a potential global economic meltdown and a potential global financial response. After the markets closed tonight, Treasury Secretary Hank Paulson announced that the U.S. government will buy stock in financial institutions. Remember, fellow taxpayers, that's our money, public money. The two men who are probably now reconsidering how fun it might be to take over the presidency in January, those two candidates each offered up new elixirs to ease what ails us. Barack Obama proposing a new set of tax cuts and loans as part of a small business rescue plan.
We won't grow government. All we're going to do is work within the Small Business Administration to keep folks afloat, to keep these businesses open, while providing tax cuts to lift the tide. It's what we did after 9/11. We were able to get low-cost loans out to tens of thousands of small businesses.
So that's Obama's pitch today. Here's John McCain's.
Current rules mandate that investors must begin to sell off their IRAs and 401ks when they reach age 70 and a half. To spare investors from being forced to sell their stocks at just the time when the market is hurting the most, those rules should be suspended.
Concrete, specific pitches from both candidates, for which both win style points, at least from me. But what's going to happen at the big international meeting this weekend? Some new big dramatic move by our government? Will this Paulson public buying of stock plan just announced make a dent? Joining us now is Robert Reich, Secretary of Labor under President Bill Clinton. He's now a professor at the University of California at Berkeley. He is also a Barack Obama supporter. Mr. Secretary, thank you for joining us.
Hi, Rachel.
So the week that ended July 22nd, 1933 had a 17% drop in the stock market. This week had a more than 18% drop in the stock market. It's very scary.
Well, it is very scary. Yeah. I wish, I'm tempted to say we have nothing to fear but fear itself. But the trouble is, fear itself is pretty scary.
Yeah. I mean, is it true, though, that the disaster in the stock market specifically is more of a symptom now than the actual illness? Are there other indicators we should be watching that may be better indicators with what's really going on than the stock markets?
Well, almost every indicator right now, Rachel, unfortunately, is heading downward. Credit markets are freezing. They have been freezing for some time. And obviously, the reason Barack Obama was talking about small businesses today is that small businesses are the major generators of new jobs. And if you can't get credit to small businesses, if they can't borrow, then they're not going to be new jobs. In addition, though, we ought to be watching the unemployment figures. We have lost in this country, in the private sector, so far this year, about 1 million jobs. And if unemployment continues to rise, we are in deeper trouble because people can no longer pay their bills.
What's your initial assessment of this new plan, somewhat unexpectedly announced today by Secretary Paulson, the idea that the Fed will buy stock in financial institutions?
Well, I think it is wise to give financial institutions more money as long as taxpayers do get shares of stock, so that if there is an upside to this, when and if financial institutions ever recover, taxpayers as shareholders will get some of that upside gain as well. But there is an irony. You mentioned the word irony before. There is an irony here. This is an administration, after all, that came into office dedicated, it said, to the free market. And now here we are, taxpayers owning big chunks, or about to own big chunks of Wall Street.
Robert Reich, former Secretary of Labor, current professor at the University of California at Berkeley, Barack Obama supporter. I have a feeling we're going to be talking to you a lot in coming days to explain this stuff. Thanks for joining us.
Thanks, Rachel.